You remember the old commercial, clap on, clap off? Well, it's war on, war off. Friday today, futures responding in kind. Oil getting shellacked here. And where does that come into in our whole rotation scenario? What stocks are benefiting from it? What stocks is hurting? This yen trade. I mean, come on. Different reaction this time in the markets. We'll figure that out too. What is Ryan Cohn up to, huh? To retiring some debt? What's he planning on doing? Well, we'll take a look at eBay, but eBay gets a downgrade, so we'll figure that out as well. It's a Monday on pre-market prep, folks, and we got a lot to cover, so we're going to get it started right now.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, good morning, traders and investors. Here are our charts brought to you by Trade Station. Born to trade, chart, analyze, customize, all in one platform. Trade smarter, move faster, and stay in control with the platform built for serious traders. Well, we're up about 36 handles, leaking off the highs of the session. Got hit after hours on some war news, but boom, that's gone. Just in one truth. The buck is down under par here. Some pressure from the yen, 7 cents, 99.71. TLT, when you're hanging out at the low of the move, you're hanging out at the low of the move. Up 12 cents at 82.37. Right back down 864, 120.53. If there's a buy the dip and sell the rip market, that is your crude oil. GLD and SLV, they're up modestly here. GLD up $1.04, 372.58, and silver up just pennies, up a dime actually at 52.46, and Bitcoin just finding a nice trading range here. Down $365 at 62,765. Let's bring in the Triple D and the Brentster, and boy, a lot can change in 24 hours here. At just before that 8 p.m. close, or around 5 p.m., we got the news: escalation, and no escalation. In fact, let's talk today.
The song changes, but the story remains the same. And that's where we are. Friday night, just after 4 p.m., we get the news. Serious escalation, the whole shebang. We're going to hit him harder than we ever have before because the stock market just closed at 4 p.m. He doesn't respect after hours. He doesn't care about that. He sees 4 p.m. close. Okay, let's get him. So this is what the tweet came out. The USA is locked and loaded and ready to go against the Islamic Republic of Iran. It at levels of military terror, strength, and power not seen since World War II. Despite this, we have just been asked by Iran and other Middle East countries to hold off any attack, and the perimeters of a deal if the perimeters of a deal has been agreed to. So this was the tweet on August the 1st from Friday, late Friday night. Sorry. So okay. So we had to go back. So that's why I'm confused. So he actually was saying that he was going to hit him as hard as before. But then already by late Friday night, he was already tacoing a bit. Then Saturday, we get the news of the full taco. Oh, no, we're going to hold off everything because we have the parameters of a deal here again. Iran denies all of this. They deny asking for anything. They deny everything. But we know the same story. Trump bombs on the weekend, doesn't bomb during the week. So it's not surprising that we come in and we hear peace talks as we approach the Sunday night open, and the market falls for it for the 47th time. So the market starts rip-roaring and rallying hard here all weekend long, all Sunday night long, and into obviously this morning here. Oil has sold off substantially here because we believe everything that this administration is saying, even though we know some of this may not be absolute truth.
You summarized it well, Triple D. I don't know what else we can say here. Thanks for walking us through that.
So let's start with USO. Right back down, Joel. Right back down to the lows from last week. So we go boom, right straight down on potential peace talks. Is there going to be peace? Is the strait going to open? No, there's not. No. But does the market eventually just become numb to it all again? Probably. Has oil had a substantial rally and, maybe overbought from the July low of USO 100 up 40% in 2.5 weeks. Yeah. So, I mean, technically we're tired. It's all off headlines here. The algos don't know, what to believe and what not to believe. They just see, peace talks, they sell USO. That's what it is. So we'll probably go through the week. We'll be probably, a little bit calm. And then we'll get to Friday afternoon and, Friday the markets will close and we'll be bombing them again. I mean, the story just continues to go on the same way. You guys
I don't know what else to say.
Joel
I
doesn't even
mean,
know
it
what to
feels
say.
like I'm like living in this like
Groundhog Day. Bill Murray.
Yeah.
The movie.
Yeah.
Bill, that's the best movie. One of the best movies. I love that movie. This is Groundhog Day. We're all in Groundhog Day when it comes to the war. It's the same thing. It's so predictable now. It's absolutely gone to a point of ridiculousness. So, like to the whole escalation literally at 4:15. Like that we did this 2 weeks ago. Like the same thing. And then peace talks by Sunday afternoon, although it was a little bit early. It was like Saturday night was the pease talks breaking. That's why I even tweeted out. I was like, is it Sunday? Did I lose a day? Because peace talks usually don't come till Sunday night.
That's funny.
So anyways, bottom line here, whatever. That's what the catalyst is. But when USO goes down, immediately the algos buy everything. But we know there's separation here, folks. There has been separation for a few weeks here now where the everything rally is not everything, because we also have this other thing that's been happening is hardware versus the everything rally. Hardware versus the value names. Hardware versus the stocks that are very sensitive to oil prices. So what I have argued correctly is that we have now got this rotation of that where hardware names are actually moving with oil prices, which is completely insane when you think about it. But it's not insane when you think about it in the context of rotation, because you have, Sandus trading down here this morning, down 5%. What's happening to Sandus? Micron down 5% here this morning. Applied Materials down 3.5%. AMD trading down. All these stocks were way up on Sunday night. All these stocks have given it all back and then some, because these stocks do not care about oil prices. Why? Think about Sandus. Think about Micron and shipping RAM. How much shipping costs are in RAM? How many pieces, Bent, you were saying it, like you get a cart, like a truck, RAM can you put in there? Shipping costs have got to be very low for RAM. So, oil is not going to impact like positively. Lower oil is not making Micron make a hell of a lot more money. It's negligible. It's probably fractions of a percent.
I have a little flash drive on my desk right here. It's got some song files on it. I know this is not RAM, but like, look at this thing. I can store
RAM's a lot smaller.
RAM's a lot smaller. I can store 16 gigs on this thing. How many of these little things could you fit inside of a tiny little box or a big box? You can fit 1 billion of them, I think.
Ship's cheap. It's not sensitive to oil. So we have just gotten to this point where if it's not sensitive to oil, then we're going to sell it off, when oil prices go down, it's crazy that it's come to this. But we know we've had this whole value versus hardware thing, this whole real economy versus the AI economy trade going on for a while. So when you think about it in all this context, it kind of makes some sense, even though logically it makes no sense at all that AMD and Micron are going to sell off when oil prices are going lower. But that's what we're seeing. That is what the rotation has had. That is where traders are making some money if they're able to identify it. We've pointed this out now. This is the third time, I think, on PMP, we have pointed this out, that the AI trade does not care about oil prices. And if it doesn't care about it, it means actually that the other stocks do. And if you're rotating from those stocks into those other stocks today, or if you're rotating into all those value names today, those stocks that are sensitive to oil prices, you're taking it out of other places. Where do you take it out of? Probably the hardware names. That's the rotation. The rotation's crazy, but it matters.
This is a wonderful setup, a wonderful macro setup that we're giving everybody a, way to kind of like have a sense of where the market is going before the market opens. The other macro item that we have here this morning that we were starting to talk about, like beginning, mid, definitely more at the end of last week, is some potential yen intervention and where kind of the carry trade fits in here. So if we're setting the macro landscape here, where we have oil moving despite what hardware is doing and vice versa, where does the yen and the carry trade fit into all of this?
Just before I finish this conversation,
Sure.
this chat's making a great point. They're like, well, what about, we're looking at You know, you can look at the overseas markets. You can look at EWY, South Korea getting hammered. You can look at SKHY getting hammered and say that's why memory is down. Absolutely. Absolutely. Like SKHY, I've said too, is the leader. The leader. So look at SKHY. It's leading all these stocks. SKHY doesn't care about oil prices either. It was way up last night. It was trading so much higher last night. It's rolled over either. So it's the same thing. So going back to it all, it's like oil prices are lower. Let's go buy SKHY. No, we're not going to go buy SKHY on lower oil. It doesn't care about it. So it's applied into the same thing. So if you've looked, actually SKHY is positively correlated with oil right now too, meaning if oil goes down, SKHY has been going down. So the same thing applies to that as well. So we can take it right back and say, yeah, it's the overseas, it's the Asian markets, it's SKHY. It is SKHY, but it doesn't care about oil price either. So I just wanted to finish that conversation because it's tied into the whole thing. But yeah, if you're just looking at leadership in this group, SKHY, SK Hynix has been your leader for a while here now. And Jay, not one mention of the software bit. You were reading my mind because you know what? Software stocks are all up. That was my next conversation to come in here. Next conversation. Jay, you could do the show because that's right where I was gonna. Because if you're selling hardware, you're buying software. This is the rotation. This is all that matters in this market. It's not what the chart looks like. It's not about technicals right now. It is all about rotation. If you were ahead of the rotation, you are making money. If you were just thinking about this rotation last night, SK Hynix last night on Robinhood was trading up 3%, Joel. It was trading up at 150. You're buying SK Hynix because oil is down? Because the straight might potentially be open for the 47th time? You're doing it backwards. That's where we're looking. This is where the opportunities lie because the algos haven't even figured it out yet. They're too stupid to figure it out. You as a human being can adjust more quickly. Maybe when AI comes and starts trading this market, it's different, but there are huge opportunities here that are being presented to us for, you know, like when everything rallies, when the algos just come on Sunday night and they buy every single stock up, you know, because the futures are up. There's going to be separation when real human being traders come in because they've figured it out. That's what the difference is. The human being can actually think. The algorithm's just doing what they're programmed to do. There's not that much AI trading the markets. So don't tell me about AI thinking and trading the markets. It's not doing it much yet. It's scary to unleash that. It's mostly algorithmic. It's mostly what those algos are programmed to. And eventually humans come in and say, no, we're not buying SK Hynix because oil is lower. We're actually going to sell it because we're going to buy all these stocks that care about oil prices. It's all about rotation. It's the only thing that matters right now.
And just going back just to these hardware stocks, I mean, how quickly we forget the drama that end last week, right? With Leopold being taken out of those positions, and then the rally into them, and you know who was selling into the rally here. So, you know, we looked at you were talking last week, Dennis, about, well, there's the bottom that marks the bottom in these hardware stocks, right? Maybe, you know, he puked them out at the bottom. I don't think so. I don't think so at all. And I think today's action, I think actually the rebound of some of these stocks in Micron, I'm not impressed with that at all. SanDisk, they're not even sniffing some of these upper levels. So I think there's, you know, whatever the catalyst here last week, with the catalyst going this week, this trade's under pressure. And it's going to continue to be under pressure. You get other things like the news that we got today. But there's the rotation, you know, how it flipped the switch and they were just selling. Well, I think you got a reversal here, and Microsoft ripping again today, up $9. We'll have to check out the IGV. So a lot of dynamics here.
The rotation is violent, Joel.
Yes.
And okay, so we had the Leo rally. We had the shove it up Leo, you know, like whatever you want to say there, where, you know, all these stocks in his portfolio rallied 20% one day. The complete Leo sold the bottom rally here. This did not hold, Joel, to your point. This tape is ugly. Like I thought that was going to be it. Like, and I still think it could be the bottom. Like, and we're now going to retest it here now. But this is like an ugly, if you're like bullish all these chips, you did not want to see this happen. Give back all those gains that quickly. We get these. This shows again that you just cannot chase in this market. Like what we were saying, you absolutely, I think the bottom is in, but you cannot chase these prices. You cannot buy stocks when they rally 20% in this market. This is not what you want to do. You cannot do this. You cannot buy stocks when they rally 20% in this market, because this is a contrarian market, not a momentum market. It's up 20%. Oh, I'm going to buy it. It's going to go up 40. No, it's not, because this market has been fading moves for 2 months now, and you're sleeping on it. And when stocks rally 20%, they give it back. That's what they're doing in this market. We're not in 2020 anymore. We're not in May and April anymore, where the momentum just goes and goes and goes. And what's going to stop these stocks? No, there's stuff stopping these stocks now, and it's profit taking. It's short-term profit takers that have taken over here. Do not chase in this market, because if you're chasing that 20% move in Micron or that 30% move in SanDisk, man, you just got it shoved down your throat in the last 24 hours of trading.
And if you got this GIF rally and Seagate Technologies, off its earnings, take it back half of the move. How many of those? How many have you seen the half of the move? Actually, those were 4 red bars on the 4 days of the earnings, meaning the close was lower than the open. You get to 50%. You're failing at the Seagate. Yeah, you had the outlier from 700 to 920. This thing doesn't get back over 920. It's $100 away from there. This thing's got another date with 700. So yeah, you can find outliers and things that come up, but look at that. Is that a chart? Stalling at the 50-day. Now the 50-day is way up at 890. I mean, that chart looks absolutely horrible, Jay. Horrible.
I got to correct the chat here too. Okay. Stop. You guys are wrong on this. SKHY got hammered in our markets on Friday afternoon. Do you remember, Joel? SKHY hammered Friday afternoon. The market overseas is closed. The Asian market is closed during that time. So what you see happen Sunday night is a catch-up from the sell-off on Friday. That's why you're seeing it down 9-12%. SKHY on Robinhood last night was trading at 150. It wasn't down 9%. So if you're looking that for the leadership, you're over in the Asian you're looking backwards, because it was actually trading off of our markets. It wasn't open on Friday afternoon. Their markets are a day ahead of us. It's Saturday. On Friday afternoon, it's Saturday over in Asia. So they got to play catch up. So when you see it and you're looking at the quotes, oh, it's down 9%, it's really going to hammer our markets. It was down 9% because we were way down. So it's playing catch up there. What happened actually on Friday night, you can go into your Robinhood, you can go into your Interactive Brokers, you can go into your TD Ameritrade now, and you can see what it's doing over here. SKHY was trading 150 Sunday night. It has rolled over here now, and we're down 3%, but it's not playing catch up to what the markets were doing. Their markets were catching up with ours when you're looking at those prices. So you're looking at it backwards as well. Friday's afternoon sell-off, like Friday morning, we were way up. Remember SK Hynix way up. The Asian markets were closed. So they have to catch that move up.
Okay. When we trade 24/7 on whatever these exchanges are creating, we won't even have to worry about it, because everything will be integrated, real time, up to date.
This is common sense. People are fighting me on this. So listen, go back to Friday's action. What happened on SK Hynix on Friday? Where did it close? Go look where it closed overseas. Go look at where it was trading Friday. We opened strong, closed over here. We're closed over here Friday morning. We're closed. Asia's closed. And then we tank on our markets. It has to play catch up, so it catches up to us. So yes, it is indeed true that our markets actually were pricing the SK Hynix. We knew it was going to sell off on Sunday night because we had already sold off 10%. Now we have sold off more, but we are only down 3%. So everybody who says we're playing, that we're following their markets, and why aren't we down 12? We're not down 12 because we had to catch up the 9. Follow me, please.
Thank you, Triple D. No, that was great.
Okay, just telling you. Sometimes Asia can lead. I'm not saying they can't lead all the time. If you see the thing down 20%, then all of a sudden, they are open ahead of us. So that means we have to catch up another 9. But when you see it down 9 and we fell 12, we're actually up 3. Just follow us on that.
I think it makes sense.
It doesn't make sense. It's just fact. It's arbitrage. It's going back and forth. But again, we know the arbitrage mechanism doesn't even work perfectly here, because we've talked about that before too. If you look at where SK Hynix is trading overseas, it's not the same as where it's trading over here, because it can't do the arbitrages cleanly. But, we're always playing catch up to a certain extent with each other. If SKHY was down 20% over in Asia last night, that would have been a leader. We would have had to fall to catch up, and it probably has now happened that, obviously continue to fall here through the night. But originally, when we opened last night in Asia, even though we opened down, it wasn't down enough to catch up to where we were trading. So this is always going back and forth. Leadership, we used to argue what leads, the futures or the cash stocks. And sometimes the futures lead, sometimes the cash stocks lead. Most of the time, the futures lead. But on imbalanced days, we know the cash stocks lead. So it's chicken and the egg to a certain extent, too. You're always trying to do the balancing act. So it's not perfect. There's your education.
No,
Love
I
it.
like that. I like that. Different perspectives. So, Merger Monday? Do we
have a pretty big report here. Oh, you know what? I am going to switch Joel's chart with my screen because I do have the report on screen right now. Here it is. We have a Financial Times report saying AstraZeneca could be holding talks with Bristol Myers for a $400+ billion potential merger. This would be certainly one of the larger mergers we've heard about in a while, and specifically in the pharma biotech drug space.
Maybe makes sense. I thought something I was thinking about, and Adam Fierstein was tweeting about here too, is they must not like if you're looking at taking your money and you're going to merge them together, maybe they don't like the other options that are out there, because we know Lilly just is on a buying spree and they keep buying up smaller companies all the time. AstraZeneca and Bristol Myers are huge companies as well. Why are they not coming and starting to scoop up all smaller companies? Maybe they don't like where some of these smaller companies have traded up to. We know the XBI has been on absolute fire. A lot of these smaller biotech names have really risen in price here. So maybe they're just looking at it and saying, hey, we maybe could do better with our money if we pooled it together here. You got to think maybe there's some synergies, maybe there's some reasons. Bristol Myers is a dirt cheap stock. We've talked about BMY for a long time on this show. I used to own it back in the 40s, wanted to rebuy it, never did, should have. But Bristol Myers is trading at, if we just bring up the valuation here, PE, Bristol Myers, 10 times earnings. AstraZeneca, these are dirt cheap stocks. AstraZeneca, which would probably be the acquirer, I would think 16 times earnings. So, Bristol Myers is cheap. So if somebody wanted to scoop it up, it is cheap. I think where there's smoke, there might be fire.
I see AZN about 16 times forward earnings, by the way.
Yeah, so 16, 5, or 10 times earnings. It makes some sense for AstraZeneca probably here. But, is this going to happen? We never know. Is it going to be a huge premium in this? Bristol Myers, I don't know where the 400 billion, number, if they're speculating, if this is if they've got, because I'm looking at the market cap of AstraZeneca, 263 billion. And then you can look at the market cap of Bristol Myers at, was it 400 billion?
That's what
the presser, or not the presser, in the Wall Street
report,
Journal article?
the FT report. Yeah. Yep.
It was FT.
Yep.
So
FT.
I guess what they're just doing here. So the closing market cap on Bristol Myers was 133, and the AstraZeneca was 267. So they just added those up. So we have no idea what the pricing on this is going to be. They just added up the two companies' market cap and saying this would be like a $400 billion merger, which is absolutely true. We just don't know who would be the buyer for sure. Probably be AstraZeneca. What kind of premium would be paid? Would it be like a 10% premium? Would it be a 20% premium? I can't see it being more than 20. I would think more like 10. Stocks up 4. I don't know if I'm chasing it here. AstraZeneca down 9 is probably more interesting. Down 9 points, probably more interesting here. Stock's been crushed. Decent valuation here. If nothing materialized from this, it could bounce back. But obviously, they think AstraZeneca is going to pay a premium here for Bristol Myers, and they're taking that right out of AZN.
I just skimmed over the FT report, and there was no value mentioned anywhere.
Yeah, so they just put the two market caps together, which makes sense to do it that way. So I'm not saying it's wrong.
I'll tell you, it's been a while since we had a mega merger, like two big pharmas. So going back, I'm trying to think. It has been a long time here. But right now, you can see the price reaction. We'll just go strictly on price here. Really nice move in Bristol Myers. They chose to sell it. They got it to $71, and then they're like, whoo, man, $5 in BMY. That's a good quarter for BMI. So right now, a little skepticism here. So if you're looking based just on price action and you're the sell the rumor kind of camp, you want to see this thing regain a strong bid. But right now, been under pressure. AstraZeneca has kind of been a little bit of a disaster here for a long time compared to the rest of the industry, too, right? Look at this. This thing peaked in February, and now it is trading at 160. It's off the lows of the pre-market session. So they realize they have some problems here. They've been moving absolutely opposite for a lot of the pharma, and they're looking to rectify that. So we shall see. Two big companies merging. We'll just wait for news. But right now, enjoy the rip in BMY. And if you're looking at the 160 in AZN, here's your chance. Trying to get 160 in a quarter.
Okay. So more drama in GameStop here this morning. GameStop lovers, stocks trade down 8.5%. Dilution station here. We've been worried about dilution station. People keep asking me, "Oh, you like that 21, Denny? You've liked that for a bit." I bought and sold it, bought and sold, bought and sold it. I wasn't buying at 21 this time because I'm worried that Ryan Cohen may seriously dilute shareholders to try to make a run at GameStop. Now, this is not that. This is what he's doing here. Is we can look
a
at the
precursor.
headline. Well, we don't know. Announces a private exchange $1.4 billion convertible senior notes for equity. So he's getting rid of the $1.4 billion worth of convertibles and changing it in equity. We know this is dilutive immediately here. Convertibles are dilutive in the future, but when you do this, they're dilutive immediately. So they're hammering the stock on this, which it's deserved to be hammered for this. The question is why? Why is he getting rid of the convertible debt? It's sitting there. Probably maybe he doesn't want to pay, with the coupon. That could be it. But more likely, he's trying to strengthen the balance sheet. How do you strengthen balance sheet? By getting rid of debt. So this looks clearly like there's no doubt that this would strengthen the balance sheet. Why is GameStop strengthening the balance sheet? That's probably the question you should be asking. Is he going to try to make a run at eBay? We know everybody laughed at him on CNBC. We laughed at him on this show. We laughed. Everybody laughed, because there was no way that a $10 billion company can buy a $50 billion company. He's mad. He wants to find a way. He has accumulated almost 10% of the stock of eBay via GameStop. So the question now is, what's next? Is he strengthening the balance sheet to make a run at eBay? Maybe. Or maybe he's trying to do something else. Bring up the GameStop. It makes sense for them to try to make a run at eBay, but I just don't think it's possible. I personally don't see how it can happen. What I have been arguing, Ryan Cohen, if you're listening, is if I was GameStop and in your position, I would be making a run at private company PSA. That is what I would be doing. And GameStop is totally trying to change into a collectibles company here. So if you bring up the website, the first thing you go to GameStop, when you bring up the website here, it's bang. Pokemon cards all over it. Order your Pokemon sets. This is a smart transition. I agree with this transition. This collectibles market is so hot. My kid does Pokemon cards. It's crazy right now. The Pokemon stuff is absolutely crazy. So I think this is the right transition for GameStop to come in and, be focusing on collectibles, the collectibles market. And Pokemon is the hottest thing. The question is, is the acquisition to go after eBay the right way? I don't think it's possible. It would make sense for GameStop, but it would make no sense for eBay. That's the problem. But he's trying to strengthen the balance sheet to do something. I think, again, that GameStop should try to make a run at private company PSA. PSA is the company that does all the grading. They're the number one grader in the industry. They have a license to print money. You send them the card. I know because I send cards, and you send them the card. You get it back in 6 months, and they give you, a numerical grade from 1 to 10 on the card. For that service, they charge anywhere from $50 at a minimum. Actually, I think it's $30. It's $50 Canadian, so it's $35 US at a minimum, all the way up to thousands of dollars. They can be as much as 10% of the value of the card. They have a license to print money, man. They make so much money, PSA. That is where GameStop should be looking. It's only about a $5 billion private value is what they estimate. PSA is a private company. They estimate somewhere between $4 and $5 billion. At least that's what Gemini is telling me. GameStop could totally make a run at PSA. They already have a relationship with them. That's what they should be doing. But if they're still, hell bent on we're going to buy eBay, then you'd have to strengthen the balance sheet to do that. So I think they're strengthening the balance sheet to do something.
This is just being pretty consistent with Ryan Cohn's strategy, right? He took this over and he's really trying to move away from just like your traditional video, your GameStop store, right? He's tried to make it more, more of a player, maximizing some of this financial flexibility. And this is just another move to do it. Now, sure, it's funny because was it in the think tank or did I ask you on the show the other day? I'm like, oh, you love this 21, 22 area, you nibbling. And you said, no,
No,
things have been too quiet over there.
I
And you
didn't
were
say it was
worried.
too quiet. I said I'm not nibbling because I believe he's going to seriously dilute shareholders to do something crazy. Dilution has begun. So I'm being proven correct here once again. So I'm like, I'm not touching. I was in GameStop 21 to 26 a half dozen times. It was great. Why buy it at 21.20? Because they got $12 in cash, net cash down there.
True.
So this is a company that's got some value. Like I never thought it was going to get down to 13 or 14. At 13 or 14, you can back up the truck. But when you back up the debt, they got a lot of cash. But I just think they're going to seriously dilute shareholders to do something crazy. And I'm scared of that. I'm scared of what Ryan Cohen might potentially do. Like he might dilute shareholders, like seriously dilute them. Like this is a good dilution. He could seriously dilute shareholders to try to make a run at eBay. And that would be terrible for stockholders. So I'm scared of GME. I'm scared to own GME. I'm not advocating at all here to buy GME. And the opposite exactly. I'm actually scared of potential further dilution here.
And
do you buy eBay? Do you buy eBay? If you really want to make a run at eBay, do you buy eBay at 16 or 17 times earnings? It's not crazy. I've talked about eBay before. I have a small trading position in it, which I'm going to get out of today. I just happen to have it overnight because I believe, does eBay report this week? Why do I own eBay? Oh, no, I've been buying eBay on the weekends. I've been doing it every weekend because I keep thinking that GameStop might actually make a play for them. So we get a downgrade. eBay's down here this morning. It would probably be up, I think, other things being equal, but it's down because Wells Fargo downgraded to sell. So underweight. So, I mean, that's why the stock's trading down here this morning, which is that note came out before this GameStop stuff, too. That note came out in like the 5 a.m. area, and the GameStop information didn't come out till 6. So the new GameStop information isn't in there. But again, they didn't mention eBay in there. I'm just speculating that they're doing serious dilution for something.
This thing has held a pretty good bid. I think the initial what did the initial rumors come out on this? Was it way back in how long ago? No, I guess it wasn't that long ago. Maybe it was this year, right? It was earlier this year when it was around 80.
Yeah, I mean, I'm double checking right now, but yeah, I think so.
Yeah. I mean, there's if there's smoke, there's fire on this one. I mean, you would think the absurdity of the whole thing of this small company taking over this larger company.
It sounds impossible.
It sounds absolutely impossible, but price action here is giving you a different story. I mean, this thing is really now. I don't know if that's because Ryan Cohen out there and GameStop buying shares, but the street somehow still sees more value in eBay.
It's the collectibles market too is so hot. So I'm sure eBay must be doing really well. Fundamentally, this company is doing well because you go on eBay and, they make their fees. People are selling their Pokemon cards on here. They're selling, a lot of other collectibles on here. This is just eBay is the place for collectibles. It's the hub. It's what GameStop wants to be, is eBay. That's why, again, it makes so much sense for GameStop to buy eBay. But eBay, what the hell do they need GameStop for? Just go away. So I don't think there's much like premium really in here. I honestly don't see how Ryan Cohen's going to pull it off, but I don't know that he's not going to try. Meta here before guest. Just quick, like just jumping into. I just wanted to say there's only like from an earnings perspective, we're going to preview all the earnings after our guest here. We've only had a few companies report here this morning. We just quickly fly through Tyson Foods. Marriott is probably the big one because it's down significantly here. KRYS, Crystal Biotech is down 8%. It also reported as well. Sally Beauty reported. Marriott's probably the highlight from this morning here. It's getting hit down 14 points. Brentster, if you do have the earnings, we'll quickly look at them and then we're going to go to the guest.
Yep, the earnings were fine. They did beat, but it was kind of a modest beat for the quarter. 319. Analysts were looking for under 3010. The sales for the quarter did miss. Their next quarter guidance looked a little concerning. They're expecting Q3 earnings 274 to 282. Analysts are up closer to 290. They did raise their 2026 earnings guidance, but it was only by about 20 or 30 cents kind of to in line where analysts are. Marriott shares trading down 3 or 4% this morning.
Joel, I'll throw technicals to you.
Yeah, not quite the expected move here. The expected move is 4.5% or $17.50. You're trading at 58.50. And we found the expected move came right in there, 55.5 area. That's where you got to bounce. So we'll see if you find support in there. It stays within the expected range. I think just looking at this without looking at the expected move, without looking at earnings, I think you just lost a major support level here. 360's been holding this thing up since the end of May. Nice bounce in July. Once again in July, now cracking it. So I think if the bulls want to reestablish a bid in this stock, got to get back over 360 here and work your way to fill the gap. But Marriott, taking a hit. Hitting Hilton or any of these other stocks?
Slightly.
No,
Hilton
really.
already reported though.
So, yep. All right. That's a look at Marriott Hotels. 8:36. It's a Market Structure Monday. Right. Good morning to the founder and CEO of Modern IR and Market Structure Edge, Tim Quast. End of a month, new setups on Monday. How you doing?
Happy Market Structure Monday, guys. Good to see you. It's I love month-end transitions because there's opportunity and you never know what's going to happen. We can talk about that. How are you guys? Good to see you.
We're doing good, but what we want to know is the chip trade over. Is it over?
Wow, you're just going for it, Joel.
We don't play games.
No
attack.
No jab, just the full uppercut right from the start.
You want to show Market Structure Edge, Tim? If you want to show
sure.
To the screen
and
here.
So, is the chip trade over? I'm reminded of for you fans of history. So, it was in 1942, after the Battle of El Alamein in Egypt, which we all know about. That Winston Churchill said in a speech at the mayor's mansion in London that it's not the end, but perhaps it's the end of the beginning, which might be, could be fitting here. Is it the end of the beginning of the chip trade? I don't know. Who really knows? But I can certainly tell you what the data indicate. So, it's the question on a lot of minds. You could look at the click fomenting folks on social media, and there's talk about it because we've seen what has happened in South Korea and the South Korea market, and some of these stocks. You look at SanDisk, even after Friday's big bounce. I think it was Friday. Was it Thursday? May have been Thursday.
Yeah, Thursday.
30th. Even after that, it's still down 30%. And then there are the folks who will look at the fundamentals and say, well, these companies are making money hand over fist. You look at the expectations for earnings in this season. I mean, it's extraordinary. So how could it be over? Well, I don't know. No one knows. Our unique angle on these things is to look at market structure, the mechanics and plumbing of the market. So if we take maybe the sinecure, the archetype of the AI trade might be Micron. I don't know, could be. So we're going to use them as an example. And look, these data are designed for a much closer look. I'm looking at a 3-year view of demand and supply. So let me explain it if you haven't seen this before. By the way, you can, every day we bloviate about these things, and you can sign up free for our market desk notes at marketstructureedge.com. But this is supply, short volume, Reg SHO data, and it's going to be very unstable. It's much more like a seismograph, but you can get an idea from it when there are short-term tops and short-term bottoms by how that behaves. Then this top graph is price and demand. Again, it's not designed for this look, but it's an interesting view. So you can see where the chip trade in Micron began. It's when you have a lot more green. When it's hitting 10, this is where you have a lot of demand and insufficient supply to meet that demand. And from here to here, Micron pounded. And what does it look like now? Well, it really looks a lot more like this than it does this. And so I would look at this and say, well, perhaps that is the end of the beginning. Now, I don't know, but if we zoomed in to a 90 trading day view to get a closer look at this,
Sure.
You would say, well, it certainly doesn't look like April, does it? This is not a strong demand chart. And so if you're using Micron as the horse that you bet on in the AI trade, these data would say, don't bet on it right now. I think it could be the end of the beginning. No matter what happens today, doesn't mean that there won't be short-term fluctuations. But that is why I conclude that whatever has been occurring in the semiconductor trade is not going to continue, at least in the short term. Could change.
So
that's my long-winded answer, Joel.
A hypothetical situation. Let's say Micron does stay weak and SanDisk stays weak, and obviously AMD, Applied Materials, all those other names are linked at the hip. They're going to roll over with them too. What does that mean for the broad market? Is that a good thing or a bad thing? Because we have seen this first correlation with hardware and software, just keeping it even simply, but also with hardware and, a lot of these other value names. Like, the money's been flying into hardware and we don't need these old economy stocks because we got the future economy in AI. We're going to jump in memory. We're going to jump in chips. We're going to jump in everything for the future here. Is this a good thing for some of the other stocks? And is this a good thing for like RSP, for instance, which is equally weighted? We look at the S&Ps and the S&Ps are, off the highs. RSP kissed up to new all-time highs 2 days ago. Started selling off a couple days ago with the chip rally. It's like RSP is inversely correlated with the chips. What wacky world are we in?
And there's a simple, logical answer for that. And I'll answer whether it's good or bad for why you see equal weight performing well. And it comes back to the engine of today's market. Absolutely, it's exchange traded funds. ETFs are the principal mechanism that determines the direction of the markets. And these incredible, staggering swings that we have seen in stocks, the inverse correlation between Apple and Amazon, the way that Microsoft behaved, the way these chip stocks can move 20, close to 30% in a day. These are not normal behaviors in a market that is powered by rational thought. This is very much the impact of leveraged ETFs and ETFs as a class, because here's what happens. If you are running funds that are benchmarked to the market and they're ETFs, and you have some significant exposure to volatile parts of the market, to bring down your standard deviation in your portfolio, what will you do? You will buy low volatility stocks to bring that down. And how that will play out is in things like what I call the safety portfolio, where you see rising demand there. We have what we call the buy fives portfolio. There are 55 stocks in it. It's led by healthcare, which has lower volatility than the S&P 500 in the main. And it's right at 5 with declining supply. That tells you those things are showing up in the basket that BlackRock's, Vanguard, State Street, whomever wants. And it's an effort to bring down standard deviation. You can know this, traders and investors. When the market turns volatile, when chips turn volatile, when tech turns volatile, go look at low volatility stuff. It's going to benefit because of the mechanics and plumbing of the market. Now, is that good? Well, if you take mega caps, there are 144 stocks with 100 billion or more of market cap today. That could change tomorrow. Led by tech, passive money is the lead behavior. If you took these 140-ish stocks and you correlated them year to date in 2026 to SPY, the correlation score is 96%, which means they are interchangeable. And there's your answer, Joel. And Dennis, maybe Dennis, you asked that question. What is it good or bad for the market? The market is indifferent, because the market is packed into mega caps. The market does not depend on the chip trade, but the leveraged instruments do. And that's a different question. Overall, the market is going to follow the largest stocks, and as they go, the market goes. If I looked at it right now, I'd say they're fine. I don't look at this and say that the market is great. Why? Because it's right, it's ticking off a 5, but supply is rising. That tends to cause mean reversion. We've been in a mean reverting pattern since May monthly options expirations.
So let's talk about some of those. Let's talk about some of those stocks that are not the chip ones. And Microsoft and Amazon had nice rallies off their earnings. Apple, tremendous run in the earnings. They just took a reason to shellac that on Friday here. So talk about the software, the rotation, and the future course based on supply and demand for these 3 issues.
So let's take Microsoft here, which is on the screen. So whenever, that was the biggest move in human history, so far as we know, for a single stock on a single day. 450 billion of market cap added in a single day on Thursday, July 30.
Wow, I didn't know that.
And people said, well, it's the biggest move for Microsoft since 2008. I always wince whenever I hear since 2008. Right? Don't use 2008 as an example of how things behave. So on October 13, 2008, Microsoft rose almost 19%. And on October 15, the entire market fell apart. On October 13, there was coordinated global governmental intervention because of this looming sort of snowballing bank crisis. And so then the Dow rallied 936 points October 13. And on October 15, Microsoft lost 9%. And we know what happened from there into March of 2009. And so is it a great thing? I can see why it occurred. It wasn't because there was excess demand. Supply expanded to accommodate it. Who does that? ETFs do that. Leveraged ETFs are the biggest force behind changes in supply. Why? Because the mechanism that keeps ETFs aligned with a basket is a principal trade, not a customer trade. It is a broker, call it Jane Street, who will keep the basket and stocks aligned. So if this thing begins to rise, there is going to be a pelting response by machines to it, and there aren't going to be underlying sellers. But if you're engaged in bona fide market making, two-sided markets, buying and selling, bids and offers, stock will be created to fill the trades. So this will blunt that upside and bring it back down. And it tells us it's a very short-term response. Look, it's fine, but one should understand how the market works. And that is how it works. We are heavily dependent on that mechanism. I've always said there are only 2 things that threaten this market. It's not deteriorating fundamentals. That's a separate issue. It is, does the arbitrage mechanism for ETFs break? How would that happen? When ETFs, when the machine's pricing them, can't calculate a profit, or fund flows change. Those are the big threats. So Joel, I want to really quickly look at Apple and Amazon and show you what occurred there. Again, here's what happened beforehand. Great demand. It's a 10 out of 10. Supply pretty high. I mean, if you looked at Microsoft had 22% short volume. Apple had 53% ahead of the trade. Well, there's your tell. Which one would you be in? And then right into earnings, demand was deteriorating. That's also a tell. Nothing wrong on the supply side per se, except that it's twice the level of Microsoft. So traders, you can know those things. Which thing would you pick? Well, clearly Microsoft. Now, the corollary, however, the inverse trade would have been Amazon. So let's take a look at Amazon and compare them. And again, these are very short-term trades. This is how our market works. I don't care for that. I think the market should be fundamental. So here, this is kind of interesting. So you had falling demand in Amazon, which got all the way to 1, but look at the supply side. It dropped all the way to 24%, half the level of Apple. All it takes is one trade that hits the bid or the offer for that stock to reverse. But again, I would point out that most of the rise in price was through created stock. It wasn't because some holder sold it to a new buyer. These are intermediaries. So does that have staying power? No, but you can see it.
Tim, is this like, obviously we see the big pop in Amazon on earnings. We see the big pop in Microsoft on earnings, the big sell-off in Apple on earnings. And I've argued, and maybe you can like just color it for me here, but I mean, Amazon rallying as much as it did on earnings, and it reported before Apple, I was like, these ETF effects, man, are going to have a struggle for Apple to even rise. Like, is ETF effects now just controlling the entire market and the fundamentals are taking a back seat to ETF effects? Because I've argued that before. The ETF effects are so strong. Think about leveraged ETFs, like even said that on the stocks, the 2 times, Apple, 2 times Meta, 2 times. I mean, like we can talk about ETF effects, but just give us perspective on how controlling they really are.
And how these things happen. How is it that would occur? Well, it's whether you're in the basket or not in the basket. And let me explain what I mean by that. Okay. So the very quick, this is the Cliff's Notes version of how ETFs work. Let's say it's a direction ETF basket. And that basket will, think of it like a grocery list. So direction writes down the names of stocks whose options are going to be associated in the swap. It is a contract for difference, a daily reconstituted derivative that determines how those leveraged ETFs perform. But let's just say there's a list of stocks whose options will be associated. That's published through the National Securities Corp, a unit of the DTCC, to the people who sell data and to the authorized participants who will trade it. Jane Street. Let's just pick on Jane Street. All right, but then Apple or Amazon reports first. Well, so then Amazon is in the 2-time levered basket and Apple is not. And then if you're a trader, you'd go, well, then I'm shorting Apple, right? That's it. I mean, it's not that difficult to figure out if you're consuming the data, but they are ahead of us. So they have better data. They're subscribed to it. You and I can't. You and I cannot take our Amazon shares and go exchange or our ETF shares that own Amazon and go to, say, BlackRock and say, here are my ETF shares. I'd like some Amazon. You and I can't do that. A broker can. It's just a derivative. So as these things become a larger and larger part of how the market is priced, and a handful of machines set all the prices, it becomes the principal purpose. And yet we look that, the business news has a propensity to look at fundamentals. I heard Roger Altman from Evercore this morning talking about the great fundamentals. I can rattle off all these people who talk about great fundamentals in the market. And I understand that. I'm not knocking it. I'm saying there's discord between the way that the market is priced and how fund flows move and that conversation. And so, yes, I agree with you. The hard part is to know at what point does the pervasiveness of ETFs become a problem where the market is so dependent on that short-term relationship that we don't know what it's going to do? Well, it's now. We don't know whether the market is going to rise or fall. Dow futures are up 550 points. Does that mean the market will finish higher? We have no idea, right? That alone tells us that we have reached the point where this arbitrage mechanism that prices the entire market has reached a tipping point. Now, that doesn't mean the market's going to fall apart, but it does mean that as investors, you have to recognize that you have to look at the market differently to know what's going to happen next. And, leading into that, what's next? Well, there's the July to August transition. What tends to happen? We say new month, new money. Generally, in a new month, money will come into the market for 2 core reasons. You and I make contributions to our 401k retirement plans. The people who deploy that don't necessarily deploy it right when they receive it. Tends to come in new months because it can bolster performance. If you're deploying capital, you get a better return. Hedge funds. If you had a bad July, you have August now to try to fix it. And so you want to get going on that right away. So it tends to favor the beginnings of months over the ends of months. Now, here's the problem. May, June, July had no new month, new money. Didn't happen. How do we know? You can see it in broad sentiment. If you just look at 3 months, I'm going to look at the last 3 months to see what happened. You look at the demand side. Where was demand at the May transition? That's the green part of the graph. So the market jumped, but really there was no increase in demand. And so the market gave some of that back around May options expirations, and we have not moved. The price is the same now as it was then. June transition. Well, we peaked into the end of the month, but people all took profits. No new money came in. We get to July, right? You know, I always look at the one square by itself. That's the month end options expirations. What happened here? Little increase, but not much. Primarily, the market went up because there was a deficiency in supply. So now we're hitting the market with a little uptick here and a little decline in supply, but already it has bottomed. I'd look at that and say, I don't see a strong signal for August inflows. So you could get a move that catches people out. You're like, oh, the market's moving, and then wham, the floor drops out from under you. So be warned. On a daily basis, if we took a daily read on this supply line, it's 5.9, not 5.4, where it is right on the average basis. And that's pretty close to the red line. So again, I don't know, but the data have been very good at telling us what to expect. And is it the end of the beginning? I would say it is. And is money coming in? Not really. They're just very short-term leverage trades that are driving the market.
Just moving around.
Exactly.
Just moving money around, right?
Yep.
Yep. That's what we're seeing. All right. Tim Quast, founder, CEO of Modern IR Market Structure Edge, joining us every 2 weeks on Pre-Market Prep. Always great to get your perspective on the markets, and we'll see how this whole supply and demand issue plays out.
We will see, guys. Thank you very much. Always good to see you.
Of August. Thanks, Tim.
Thanks, Tim.
All right. Well, earnings season never ends on Pre-Market Prep. And
we're in the heart of it still, even though the Magnificent Seven is pretty much behind us. Now NVIDIA coming later, but there are so many companies reporting this week. 1,000 companies reporting this week. Brentster, throw it up on the screen. There are some big names here.
Fees calendar is on screen. Let's go through. We talked about Marriott a little bit. We mentioned that Tyson reported tonight. We have Palantir, we have Snap, we have On Semi, ticker ON, we have Clorox, we have Vertex, we have Jazz Pharma.
Wow,
that's just tonight.
And then going into Tuesday, Caterpillar is going to be big. Obviously tied in with the AI trade. McDonald's, Spotify. Merck, you want to get the drugs, Merck and Pfizer are going to report too. Wayfair, but Tuesday night is the night we get AMD and SpaceX. Holy cow, those are going to be two enormous reports. We know valuation has been an issue for SpaceX. We got to see what Lisa Su's been up to as well. That is going to be market moving. And then Wednesday, don't snooze on SanDisk and Western Digi in the afternoon there too. So huge 48 hours of earnings coming up for you guys. Eli Lilly in the morning, Shopify, Uber, Circle, Disney, House of Mouse, Unity, AppLovin, Fastly. I mean, there's just a pile of stocks reporting here. Thursday starts to calm down. Datadog, you get a quantum stock, QBTS, DKNG. So it starts to calm down a little bit into Thursday. Team. Friday, Oklo, Take Two. But wow. And then Saturday's Burke, even getting some earnings on, going to see what Greg Abel's up to there. Wow, huge week of earnings here. Joel, thoughts, concerns?
I mean, the tendency of a lot of these stocks pre-earnings runs, right? People, anticipating good things in a bull market, and short saying, I don't know, I don't want to be short going into this report. But a lot of interesting reports. Jobs number on Friday too, to keep that. To keep that in mind. So as far as economic data goes, not seeing a ton of other stuff, but we'll be looking for that jobs number on Friday.
Sorry. Also, just fees letting us know. SpaceX lockup, expiring the first part of it, I believe, on Thursday. Correct me if I'm wrong. I believe it's Thursday there, according to fee there.
I believe so. And he was kind of going like, why do the earnings really matter if we just have this lockup a couple days later?
Like, is everybody that's got
is-
these stocks at pennies going to just turn around and just start selling the hell out of it? Maybe. That's going to put weight on the stock all week. Like, I think you're going to see, and I've been saying, I think you're going to see SpaceX under $100. I was also saying I'm going to load up under $100 and see what happens there. I know Trader Prad's saying I'm just buying SpaceX under $100 and sticking it in my long-term account, not looking at it. That's what I was intending on doing here too. But man, is it hard to buy a stock when it's going straight down? It's hard to do.
We do have our 9 a.m. news rush. I'm digging through right now, seeing if anything sticks out like a sore thumb. Not really. First glance here, nothing super exciting. I did see a press release from Sentinel-1. The stock is not moving. The press release was that they are expanding their Wayfinder Frontier AI services. We did get a earnings date from Snowflake. Snowflake is going to be reporting their next quarter results on September 2nd, 2026. STN News Desk, did y'all see anything else exciting at 9 a.m.?
I'm going through and leafing through, doing the same thing you are right now because so many come out. This is one of the big news dumps of the day. Not a lot market moving here, so I don't see anything really jumping out at me. That's going to
American
be like,
Air and Citi elevate their premium channel travel with enhanced Citi MasterCard deal. Nothing exciting there, but I thought I would mention. I think we're pretty clear here on our 9 a.m. news dump. This is how it happens, folks. This is what we do at 7, 7:30, 8, 8:30, 9. All these press releases hit. We need to parse through them really quickly, see if there's anything moving stocks. Nothing sticking out here. So I think we can kind of wrap it on pre-market prep and head over to the Stock Trader Network.
All right, folks, thanks for joining us on this this busy Monday. Back with you tomorrow morning, same time, same place.
Thanks for watching Pre-Market Prep. Hit like, hit subscribe. Join the SCN Think Tank at StockTraderNetwork.com.